get a job. It's jobs week in the market. What's going on, everyone? Jeremy Ritz here. Courage pays better than fear trading, with another episode of Driven, insight into the daily life of a trader. And this week it's been all about employment data, health of the labor market. We got challenger job cuts today. We got jobless claims. And tomorrow, the most important day, we are going to get non-farm payrolls and the unemployment rate. And so we should see a pretty decent sized move, who knows what in what direction, tomorrow in the markets. And it's exciting. And here recently, I've been doing this challenge this month in September, where I'm getting up at 4 a.m. Monday through Friday, and I'm allowing myself to sleep in until 4:30 a.m. on Saturday and 4:50 a.m. on Sunday. So, reason why I'm trying to maximize my time, and I've been spending a lot of time just back trading and studying markets and historical patterns. One of the things I looked at today, I wanted to see when the September jobs report has come out since 2018 up until 2024. What has been the response in the market? And specifically, I was looking at what was the 10-year Treasury note doing, what was the VIX doing, and what happened to the SPX. And typically what you see heading into the unemployment rate is that the 10-year Treasury is dropping, it's falling. And this can be a little complicated to understand. When that yield drops, it's because people are buying bonds, government bonds, the 10-year. So that decreases what the yield is on the 10-year. And so what we've seen in previous instances from 2018 is we've seen that 10-year drop, and we're dropping right now in the 10-year, and it can be a positive for stocks. And we also saw some VIX spikes, and I believe the numbers bear out that 4 out of the however many instances I looked at, I believe that it was 6 or 7, 4 of those instances we saw pretty significant falls on the SPX the day of the unemployment rate, if the 10-year Treasury was down. So if people were buying the 10-year, and we're seeing that pattern play out right now. And that doesn't mean that we're going to see a massive drop tomorrow in the stock market, because things actually look quite bullish today. The SPX was up, I believe, a high of around 25 points. I just checked before I started recording this video. We were up about 23 points. But it is something to just keep in mind. And again, you always have to hedge and consider what possibly could happen based on the data that's out there. And if you think back to last year, the flash crash, August 2024, that came off of weakness in the unemployment rate, concerns about the job market. And so what I'm interested to see is, because all the jobs data that we've been getting hasn't been spectacular, the unemployment rate is expected to be 4.3. I wonder if it could be a tick higher. Can it come in at 4.4? And if that's the case, that more than likely is going to put downside pressure on stocks. And so there are different ways to play the market. Again, it doesn't just have to be buying shares, going long, day trade, swing trades, or shorting shares, or just buying calls and puts. You can also do things with options where you're setting up spreads. And I set up what is known as a ratio spread today, where I sold a put and then used the premium from that to purchase 2 puts at a lower strike, so that if there is a collapse, then I'll be able to profit on the downside move. But essentially I paid for 85% of the trade, so there's not a ton of risk involved. And if it goes against me, I lose, but I lose very small, and the reward is skewed in my favor. So we're going to see what happens. I'm just basically playing the probability here that we have the 10-year falling, we have markets at all-time highs, we've had weak job data come in, and the unemployment rate is expected to be a tick higher. So putting all those things together, playing those probabilities, I'm going to see if we get that massive drop, if we get a 100-point dump like we had before off of a poor unemployment rate. And if it works out, then I can profit, and if not, then I lose small. But again, that's really the power of the markets, is knowing these things, which the more time that you spend learning and studying, you realize that it's nearly infinite, the number of things that you could do to generate money from the market. And this ratio spread is an example of that, and it's just a super cool thing. So I wanted to share that with you guys here today on this episode of Driven. So a little bit more nuanced here, a little bit technical, but it really just goes to show how powerful, how broad, how diverse, how much depth there is in the market. So what do you think is going to happen? Are we going to get a high unemployment rate tomorrow that people aren't expecting? Is it going to be higher than the 0.1 tick up that they're anticipating? Let me know in the comments below, and I'll see you back here for another episode of Driven. Make it a great day.